So all these things are there. Along with that, we have got long-term liabilities. In the long-term liabilities, as I already told you, those liabilities which is having a life of more than 1 year or to be paid after 1 year. Then capital, you all are aware of capital and drawings, so we are not going to discuss that. Now let's take up a question and we will solve it. So what is given here? From the following balances, prepare a trading and profit and loss account and a balance sheet for the year ended 31st of March 2017. Here the informations are given, so from here we have to prepare the trading and profit and loss account as well as the balance sheet. So let's start. We can start with the marking of the items, right? We can start with the marking of the item. So what I will do is that I will use here the marking. So first of all, it's carriage on goods purchase. Goods purchase, so it's referring to direct item, so it will come in the trading account. Clear? It will go in the trading account, debit side. Then coming to the next one. Just a minute. Carriage on goods sold. So obviously it is going to go in the profit and loss account, isn't it? Before that, let me make it a little big so that just a minute, so that we can get little more space in solving the sum. Yeah. Then carriage on purchase will come in the profit and loss account. Okay. Why it will come in the profit and loss account? Because it is a indirect item, so it will come in the profit and loss account. Then manufacturing expenses, it will come in the trading account. Then coming to the next one, advertisement. Advertisement will come in the profit and loss account. Okay, it will come in the profit and loss account. Then excise duty. Excise duty refers to the charges you pay for bringing the goods in your business for production. Okay, that is why it will come in the trading account debit side. Then coming to next one, again factory lighting, trading account debit side. Debtors, as we just saw that it will come in the balance sheet. This side, what is the heading? Current asset. I'll just mention it specifically. It is balance sheet, current asset, right? Now coming to the next one, creditors. Creditors will be balance sheet, current liabilities, isn't it? Which saw just now, current liabilities. You need to remember where the items fall, okay, under which group the items fall. Once you understand the items, what it is very, very easy to identify. So it will not be very, very difficult. And dock charges, dock and cleaning charges will come in the trading account debit side. We know that we have done the previous day. Postage and telegram will come in the profit and loss account debit side. Then we have got next one, fire insurance also will come. Fire insurance premium will come in the profit and loss account debit side. Then we have got patent. Patent is a non-current asset, isn't it? It's a non-current tangible asset. Non-current, non-tangible asset. Okay, so intangible asset. Okay, non-current intangible asset. So it will come in the balance sheet. Which side? Balance sheet. Asset side as non-current asset. NCA, non-current asset. Okay. Then coming to the next one, we have got income tax. Now remember that income tax is in a sole proprietorship, it is taken as personal expenses and it is taken as drawings. So what will happen with this is that it will be deducted from the capital, minus from the capital. Okay, in the balance sheet. Obviously, in the balance sheet, it will be deducted from the capital. Right? Balance sheet deduction from the capital. Then office expenses, obviously, it will come in the profit and loss debit side. So yeah, this side items are over. Now let's go to the other side and see what is there. First of all, cash in hand. So we know cash in hand, it is a balance sheet item, balance sheet, current asset, isn't it? Balance sheet, current asset. So it will come in the balance sheet, current asset side. Again, bank overdraft. Bank overdraft is again a balance sheet item, but it is not a current asset, it is a current liability. Right? Then motor car. Motor car is a balance sheet item, but it is non-current liability, non-current asset, sorry, non-current asset, right? Then coming to drawings, drawings, as we know, as we have seen in case of income tax, it is also a balance sheet item, and it will be deducted from the capital. So it will also come as it is. It will come in the balance sheet minus from the capital. Then audit fees will come in the profit and loss account debit side. Okay, audit fees will come in the profit and loss debit side. Then plant will come in the balance sheet, again non-current asset. Okay, because plant is a non-current asset, so it will come in the balance sheet non-current asset. Coming to next one, repairs to plant. Repairs to plant will be a profit and loss item. Okay, repair and renewal, all this come under the profit and loss account. And which side? Debit side. Okay, so it will come in the profit and loss debit side. Just a minute. It will come in the profit and loss debit side. Then coming to the next one, stock at the end. It is a closing stock, and if the closing stock is inside the box, remember that it will come in the balance sheet current asset. Okay, it will come in the balance sheet current asset. If it is outside the box, then you have to place it once in the trading account credit side, and again in the balance sheet current asset. The other day I told. Okay, and if it is lying on the trading trial balance, okay, inside the box, that is inside the box in the trial balance, then it will place only and only in the balance sheet. Okay, then comes next one, that is purchases less return. That will come in the trading account debit side. Less return means it's a net purchase. We also call it net purchase. Then commission on purchases, we have to pay commission for the purchases. For that also related to purchases, it will come in the trading account debit side. Then incidental trade expenses. Okay, incidental, so it will also come in the profit and loss. It will come in the profit and loss debit side. Incidental trade expenses means while doing the trading activities, some type of expenses has occurred in the business activities, so that is the international incidental trade expenses, that will come in the profit and loss debit side. Then investment will come in the balance sheet under the heading investment itself. Okay, investment is having its own heading. Investment after after non-current asset, it is having its own heading, it will follow up there. Then interest on investment will come in the gain in the profit and loss account, but in the credit side. Okay, it will come in the profit and loss account credit side. Okay, then coming to the capital, it will come in the capital. Just a minute, let me highlight it. Yeah, capital will come in the balance sheet, right? It will come in the balance sheet liability side. There's nothing to mention in the liability side, because obviously capital itself is um, doesn't require capital itself doesn't require any separate identity. It's a separate item. Okay, so it will come in the liability side. Then coming to sales, it is coming in the trading account credit side. Then trading account credit side. Then coming to next one, sales tax paid, it will come in the profit and loss account. Okay, it will come in the profit and loss account debit side. Then coming to next one, discount allowed, it will also come in the profit and loss debit side. It will come in the profit and loss debit side. It will also come in the profit and loss debit side. Then discount on purchases. Discount on purchase will also come in the profit and loss debit side. Okay, why it will come in the profit and loss debit side? Because it is not helping us in production. Okay, this discount. Okay, although it is on purchases, but it is not helping us directly. It is helping in the overall business. So that is why it will come in the profit and loss debit side. Now all the items are being marked up. So what we can do is that we can go for preparation of the trading and profit and loss account on the balance sheet. So let's start. So here the format is ready. Trading and profit and loss account for the year ended 31st of March 2017. Okay, and what has been mentioned is that we have got debit credit, along with that particulars and amount. Okay, and the items are to be placed there. So let's start. So first of all, we'll start with opening stock. So you will just search it whether opening stock is there or not. No, it is not there. So then the next item followed is purchases. So purchases less return is given here. It is 1,60,000. So it will come in the debit side as to purchases less return 1,60,000. Clear? After the purchases, next will be the item sales. Okay, so here it is there, sales less return 5,20,000. It will come also in the, it will come in the trading account credit side. So go in the trading account credit side and write down buy sales less return 5,20,000. Okay, so that is done. Now after that, let's see what is the next item. Okay, say buy sales less return is done. Now let's go to the next item. What is the next item? Then we can see from the beginning onwards, you can see trading debit side. Here it is there, carriage on goods purchase 8,000 rupees. So it will come in the trading account debit side. So let's go to the trading account debit side. To carriage on goods purchase 8,000. Okay, they have written the commission on purchases that you can write later, no problem. Okay, from the beginning onwards it should come. Then comes the manufacturing expenses 42,000. So that will be followed by after that to manufacturing expenses 42,000. Clear? After that, the next item, just find out trading. Here is that excise duty 6,000 rupees. So it will also come here to excise duties. Just a minute. Just a minute. Okay, excise duty. There's something in that excise duty. It should come in the trading account debit side. Okay, so there is a mistake in this place. It has been kept in the profit and loss account portion. Okay, so it shouldn't be here. Rather, it should be kept here. Okay, so I'm just trying to place it. Yeah, so it is coming here, excise duty, and the 6,000 also will come here. Okay, yeah, so the excise duty of 6,000 has been placed here. Okay, there is some, just a minute. Yeah, now it will be okay. Yes, excise duty of 6,000 has been placed here. Okay, it will come in the trading account debit side. There is a mistake done, so we have corrected now. So let's see the next item. After excise duty, what do we have? It is factory lighting. So it will also come here 4,400. So to factory lighting 4,400. Okay, then coming to the next one, we have got where is the trading account with dock charges and the cleaning charges of 5,200. So that will also come here to dock charges, dock and cleaning charges 5,200. Okay, now let's see what else is there in this side. We don't have anything in the trading account here. Trading account debit or credit or anything. Purchase done. Commission on purchase was there. So commission on purchase of 2,000. So we have to put it here. It is there. To commission on purchase is 2,000. Clear? After that, trading account, we don't have any other thing. Sales is done, nothing else is there. So what we will do is that we'll do the balancing. Now sales less return is 5,20,000, and this side we can see obviously the credit side is more. So since the credit side is more, so what will you do is that take the credit side total on both the sides, 5,20,000, and bring it here 5,20,000, and deduct all these sides. Okay, here also one correction will be there. The 6,000 has come up here. So now it will be not 2,98,000, it will be 2,92,000, because that 6,000 will also be deducted from this side. So it will become 2,92,000. What will you write? To gross profit, carried down in the bracket, you can write down transferred to profit and loss account. Right? Okay. Now this will be brought down by gross profit, brought down, and what will you write here? Transferred from. Okay, it will be transferred from trading account. Okay, clear? It will be placed here like this. Right after doing that, yeah, right after doing that, what you can do is that in this is place, so let's start the profit and loss account. Now in a profit and loss account, first item should be salaries. Okay, let's see whether the salaries is there or not. If the salary is not there, then we'll go to the next item. No, the salary we cannot find, it is not there. So we'll start with the first item. Let's see, serial wise we can go. So carriage on goods sold, it is 3,500, that will be placed here. So it will be 2 carriage on sales, 3,05,000. Okay, so it's 3,500. Clear? Then let's see the next one. Okay, after that, where is the profit on advertisement? 7,000. So it will also come in as 2 advertisements, 7,000. It is coming here, 2 advertisements, 7,000. Okay. After that, what is the next item? Excise duty will not come here. What is that? Postage and telegram, 800 rupees. So it will come as 2 postage and telegram, 800 rupees. 2 postage and telegram, 800 rupees. Clear? After that, what do we have the next item? Let's see. After postage and telegram, it is fire insurance premium. Fire insurance premium of 3,600. So 2 fire insurance premium, 3,600 rupees. Clear? This is there. So after that, what is there? Profit and loss. Office expenses is there 7,200. So it will come as 2 office expenses, 7,200. Okay. Now let's see the next item. And this side is over. So let's go to the other side. What is there? Profit and loss account here. Repairs on plants. Profit and loss debit side 2,200. So it will be 2 repairs on plant, 2,200 rupees. Okay. Then coming to the next one. What is there? Purchase incidental trade expenses 3,200. So 2 incidental trade expenses, 3,200. Then going to the next one. It is interest on investment, which will be coming in the credit side as 4,500. So go in the credit side now and write down buy interest on investment 4,500. Now we will go to the next item, that is, what is there? Sales tax paid 12,000 rupees. So it will come in the debit side as 2 sales tax paid 12,000 rupees. After that, we have got discount allowed, which is 2,700. So it will also come in this side, 2 discount allowed 2,700. And at last, we have got discount on purchases 3,400. So it will also come here in the credit side. By discount on purchases is our profit. Okay. Discount on purchase is nothing but discount received. And discount on sales is nothing but discount allowed. Okay, so both will be indirect income and expenses. Discount received on discount received is indirect income, whereas discount allowed is the indirect expense or indirect losses, you can say. Okay. Now, since all the items are over, so we can do the balancing here. So what you can see here, 2,98,400 plus 4,500 plus 6,400 is equal to 3,06,300, which is more than this side. So what we will do? Okay, here is the there is a mistake here, so it will become 2,92,000, isn't it? So it will become, if it is 2,92,000, so this will also be 3 lakh, right? It will be 3,03,000. So this 3,03,000 is the total, highest total. So obviously, this from there, what will happen? Deduct all the items, and after that we will get it. How much? 2,55,400 rupees. Okay, this calculation is correct because the 6,000 was already placed here. So automatically, if I deduct, it will come like this. The same value will come. Okay. So this is correct. It will be 2,55,400 rupees. Here. So this is the net profit which will be transferred to the capital account. And where is the capital account? In the balance sheet. That means we are going to prepare the balance sheet now. Okay. So here is the balance sheet. Balance sheet as on 31st March 2017. That is the year ending. You can see the year ending. It is 31st March 2017. So you have to prepare it. That is the balance sheet as on 31st March 2017. Okay. Now let's start. In this question, I'm going to show you under liquidity method. Okay, how the sums will be solved with the liquidity method. Permanency, I have explained you the format. Liquidity, I'll show you here. So both the concepts will be clear. Now let's start with the liquid. Since we are starting with the liquidity, so better we'll say where is the liquid asset first. Where is the current asset? Under the current asset, you will find the most easily cashable items will be taken as liquid asset, like cash in hand, cash at bank, and bills receivable. Okay. So see, let's see what is there. Cash in hand and cash at bank will come first. So let's see where it is. Here, cash in hand is there 2500. Okay, so that will be first item in the asset side. Cash in hand 2500. Clear? After that, let's find out cash at bank and bills receivable is, if it is there. No, this side is not there, this side also not there. Then we will go with the next item, that will be debtors. Okay, let's see where is the balance sheet. Current asset, here, debtors 80,000. So that will come the next item. It will be debtors, that is balance sheet asset side. Okay, clear? These are nothing but the current assets. Okay, current asset. So this will give you the information about the current assets. Then coming to the next item, let's see what is there in the current asset. What else? Debtors over. So let's say this side, cash in hand is over. Then current asset. Stock at the end. There is a closing stock 76,000. So it will also come in the current asset. Stock at the end. There is a closing stock 76,000. Clear? Now let's see what else is the current asset. Current asset. This is over. No, there are no other current assets. So next will be investment. So investment is itself a heading. What is the investment? 30,000. So it is itself a heading. Okay. Investment. Under that, investment itself 30,000. Then we'll go with the next item, that is non-current assets. Okay, under the heading non-current assets. In the non-current assets, what we will see, first of all, we are going to see that the asset which is going to have lesser life than the other non-current assets. So let's find out the non-current asset. What are they? Where is the non-current asset here? Yeah, patent. Okay, patent is having comparatively lesser time period because you have to buy it for a limited time period only. So we can start with patent first, 12,000. Okay, they have started with motor car. You can put the patent also because generally it is having a lesser time period. So patent 12,000. Sometimes the patent is for a longer time period also. Okay, generally it expires with the time. Okay, but patent can be of a longer time period also. Sometimes it can be for 50 years also. Then coming to the next one, we have got motor car of 60,000. So that will come here, motor car 60,000. And after that, what else we have? Non-current asset, plant. So plant of non-current asset 1,53,900. So plant in the non-current asset 1,53,900. Let's check what else is left. Anything else? No, nothing else is left. So since the asset side is over, so we can go with the liability side, and we are following the liquidity method. That means capital will come at the end. Before that, other liabilities will come. So what is there? Just say balance sheet liability side here. Creditors 61,000. But before that, bank overdraft should be there because it is paid at the first. Bank overdraft was 30,000. So in the liability side, bank overdraft follows the first item, 30,000. Okay. Then after that, balance sheet liability side, what do you have? Creditors. Creditors how much? 61,000. So it will come here, creditors 61,000. Okay. After that, we can see any other current liabilities left. Let's see here, current liabilities. No. This side current liabilities 1 over. No. Then we will go with the capital. What is the capital? Capital we have seen it is 1 lakh, right? Along with that, we have three adjustments. One is the income tax. This income tax that was paid 24,000. It will be deducted from capital. And again, drawings 8,000. That will also be deducted from capital. And along with that, we have to add the net profit. What is the net profit? 2,54,5,400. That will come in the balance sheet. Starting with the capital 1 lakh. Add the net profit 2,55,400. It is coming 3,55,400. Okay, 3,55,400. Less the drawings, it is 8,000, and less the income tax 24,000. So the amount comes to 3,23,400. Clear? Now let's do a total of both the sides. It is coming to 4,14,400. 4,14,400. Okay, this 4,14,400 is nothing but the total of both the sides, and the balance sheet total of both the sides if the balance sheet total of both the sides tallies, it shows that your question is your solution is correct. Okay, your sum is right. Okay, this is how you can do a sum, complete sum on the trading and profit and loss account along with the balance sheet. Okay, next in the next video we'll have another sum on another complete sum on financial account of or final accounts of sole proprietorship. Till then, take care of yourself, my dear students, and do take care of your guardians and parents also. And with lot of due care, take care of your studies also. Till then, bye bye. Take care.